Hello and welcome to this edition of Forex Daily Dimes. I am your host, Josh Lilquist, and we had a phenomenal week this week, especially in the stock market. We're going to do a stock market wrap up today, talk about the dimes, the $10s, the $20s, the $30s. The $30s. I can't talk today, but I do have a special guest on the show here today, and it is the wonderful Spencer Lewis. How you doing, Spencer?
Hey, Josh, doing well. How about yourself?
I'm doing really good. It's always great to be back with some good friends talking about the financial markets, and today is Friday. The Friday edition is Pink Friday. It's still October. We're still raising awareness to breast cancer. So hopefully everybody's wearing their pink and doing their donations. As we go into these financial markets today, we know there is risk in trading. You can and probably will lose money at one point in the financial markets. The key is to minimize that risk with low risk, high reward, high probability entry points into the financial markets. And that's kind of why I brought Spencer on the show here today, because I want to talk a lot about trade plans, why it's important to have a trade plan, some of the rules and different things to follow within that plan to be more consistent and confident in your investing. Before we do that, let's do a little quick wrap up of the market. Today's Friday, so we have the S&P 500, another pretty down day in the S&P 500. Looks like we're down roughly. What does this look like? Just over 1.5%. So a lot of selling pressure coming in the market, which is pretty crazy because we had a lot of earnings that came out yesterday, which brought some more volatility in the markets as we get into the NASDAQ. That one's also down about 2.8%. We did see a lot of those earnings reports, especially with the FANGs, Apple, Amazon, Facebook, Google, that reported yesterday, and they were all positive. Is that priced in already? It kind of looks like that's what's happening. But with some of this volatility, there's a lot of investors that are basing their decisions off emotions. And that's kind of where Spencer comes into play, is how to eliminate those emotions and really kind of be a robot in your trading and investing plan. So, Spencer, when you're looking at this chart, I mean, you see some pretty big moves here, especially this is a daily chart on the NASDAQ. And I mean, you see all this down. I mean, a lot of selling come in the market. And what typically happens is the average investor just sells because things are looking bad. Now, in a trading and investing plan, you have rules within that. Why is it important to have those? I guess, why is it important to have a trade plan? Let's start with that.
Well, if you don't have a plan, then there's no way for you to know what you're doing right, and there's really no way for you to know what you're doing wrong. So, I mean, trading without a plan is like driving blind.
Mm-hmm.
I mean, you need to have some rules, some guidelines to really base your trading decisions off of. If you don't, then emotion is going to take control. That's just part of being human.
Mm-hmm.
We're not wired to be financial investors. Most people aren't. We're not wired to take risk the way that we need to take risk. So with this huge downturn, I mean, a lot of people are making buying decisions, but a lot of people are just holding and they're getting slaughtered. So how do you get out? Right? That's the biggest thing. When do you know that you're wrong?
Correct.
How do you define when you're wrong? And that's what a lot of people don't do. They don't define when they're wrong, and they don't get out with small losses. So it throws out askew their whole equity curve.
Mm-hmm.
They're taking really large losses. You might have a few large wins to offset that, a few small wins, a few small losses. Really, what it goes down to is break even trading. If you're doing that,
Mm-hmm.
you're really not collecting those big winning trades and having those trades push your equity curve in the correct direction.
Mm-hmm. And think about that too. I mean, a lot of investors probably had, all these small winners, and they had that one loser that really wiped them out. But what really that does is it really hurts your confidence. So, with having a plan, how do you gain the confidence? Obviously, you want to have some rules within that plan. So with those rules, how do you gain that confidence, I guess, to follow that plan?
Well, you really just have to see it work, right? And in some people, that is trading on simulated. I'm not. This is my personal opinion. I'm not a huge believer in simulated trading because there is no emotion attached to it. There's no real money attached to it. So, just starting out trading very, very small amounts. Now, when we talk about risk, we can talk about risk in a number of ways. We have position sizing. We also have the risk of the actual trade itself. There are some hard and fast rules for risk. One is never risk more than 2% on any given trade of your account. And I think thinking about it as percentages takes the money off the table. So let's just say that you do have a $10,000 account. Maybe just start off risking $10, right? You're going to be
Mhm.
watching that trade. If you're on simulated trading, you're not going to be watching it. You're not going to be feeling the greed when that goes into your favor. You're not going to be feeling the fear when it goes against you. If things stop you out, you're not going to feel that sadness of being wrong. And that's where a lot of people, I feel like that's where a lot of people have a lot of problems.
Yeah,
You
we don't
know,
like to be wrong.
you don't like to be wrong. That's just how you're genetically wired.
Mhm.
Especially as Americans, people that like to work a lot. You know, if you were wrong, Josh, at your job, or if any of the listeners were wrong at their job, so let's just say 60% of the time or 70% of the time, you're going to get fired
Mhm. Unless you're a weatherman.
unless you're a weatherman, right? There's a few different positions where you can be wrong that much,
Yeah.
and really trading is one of them, right? You could be wrong 60, 65, sometimes even 70% of the time, and you could have an equity curve going the correct direction. As long as you manage risk correctly and manage your targets correctly as well, right?
Mhm.
If you're taking all your targets off the table too soon, especially in the stock market where things just get completely unhinged from reality, you don't really see that in Forex too often. You don't really see that in futures too often, but stocks, what's it worth?
Mhm.
You have no idea. Why did Beyond Meat go crazy? Why did Tesla go crazy? It's unknown. It's uncalculable.
And does it even matter?
Doesn't matter.
That's the crazy thing is people look at all this. I mean, all these different tech stocks. They brought earnings out yesterday. I would probably bet that a lot of people looked at those earnings last night or early this morning and started buying.
Hmm.
And price, obviously, if you look at the price of, I don't even know if I have an Apple chart up here. Um, let's see what it's doing today because probably mimicking the one of the Nasdaq here. But let's see if we can find it here. Is it APPO? APPO?
AAPL.
AAPO. There we go. Nasdaq, or sorry, the Apple's down.
No, it's still on the Dow.
Oh, it is. Yeah. Well, worse yet, Apple's down 6% on the day,
Yep.
and that's what happens. Is people probably looked at it, and the institutions are running this market. I mean, it takes the millions and billions of dollars, and they kind of know what the public is doing. So having a trading and investing plan, but rules within it. And you brought up an interesting interesting topic. There is you don't have to be right every time. I mean, you mentioned, if you're wrong at your job. I mean, I'm never wrong at my job. I just know that,
Mhm.
right? That's just how I feel.
Yeah.
What really happens is I might be wrong once in a while, but that's a different topic for another day. But but with the proper risk management and areas of entry where you're getting in your positions, but also getting out. And you talked about buy and hold earlier.
Mhm.
A lot of people just buy and hold, which actually is buy and hope, right?
Sure.
If you guys have questions that are listening on the live stream, definitely type them in there. Any questions for myself? Any questions for Spencer? He's the trade plan guru. Um, so I mean, just going back and looking at this Apple chart, we had a pretty decent run up here since March, and we're seeing a lot of volatility. I mean, you see the size of these candles; they're pretty small here. I mean, it was volatile, but now we're seeing a lot more volatility. A lot of that could be the election, more uncertainty in the market. But when you have that plan, you just follow the rules within that plan. So, what are some of the other rules that may be in an investment strategy plan?
Well, I mean, everyone trades differently, and that's fine, right? You might be using different indicators, getting different trade picks from free services, from services that you pay for. But it really boils down. I mean, really, any trading plan boils down to three things. Well, really, four things. So, the first thing is stops. So, knowing when you're wrong, right? You need to get out when the trade just breaks down. You
Mhm.
can't be what they call bag holding. You know, a lot of strategies just have this bag holding, especially when crypto was completely blowing up. They had all these algorithms that had these huge returns, but what they don't tell you is the drawdowns.
Yeah.
They don't put the drawdowns in there, and they don't really have a set stop loss. So that's really the first thing. Second thing is position sizing. So position sizing to your account balance, I think, is the best way to do that. Again, if you look up risk of ruin, if you just Google risk of ruin, there is kind of a hard and fast limit of how much you should risk based on your account size, and that is 2%, and that's super aggressive. So a lot of people going into I see a lot of people going into Forex and a lot of people going into futures, which are all leveraged asset classes. The Wall Street bet people playing options.
Mm-hmm.
They're leveraging so much of their account, and either they're right and they make double, or they're wrong and they lose everything. So
Double-edged sword.
yeah, position sizing is key. The next is targeting. So if you get the stops right, you also need to target correctly. So when you're right, you need to be right more than when you're wrong, or else your equity curve is just going to stay flat, or have a slow downgrade just due to commissions and the cost of trading.
Mm-hmm.
And then the final component that kind of goes within all of that is your edge.
You have to have an edge. We talk about that every single week.
Yeah, and regardless of what strategies you're using, it's going to fall into one of two categories. So there's edge based off of mean regression, which most people know. What's a good example? Bollinger Bands. So when price goes too far too fast, it tends to revert to the mean, and you'll see a lot of algorithms trading that way. I don't know a lot of humans that actually click the button that trade that way. And then there's autoregressive, which is trend following, which is more what actual humans do.
Sure.
They're following the trend. They're getting out when that trend ends, and managing the trade that way. So really, if you have edge, if you have all four of those things correctly, you should be on the right path.
Mm-hmm.
At least if you follow those things to a T, you'll figure out what you're doing wrong and what you're doing right pretty quickly.
Yeah, we have an interesting question here, and this is not a politics show, but here's one of these questions that we're getting every single day, and Luke asks, what will happen to the market during the election? Now, to answer this nicely, and I guess where our viewers won't be offended, I don't care.
Yeah.
Right? I don't care what the market or what the election is causing. What I do care is it going to bring volatility, and is that an opportunity? Right? And a lot of people are afraid of volatility, but that's why what Spencer is talking about, of having the plan, having a risk management plan, having where you're wrong, you have to get out. And sometimes us as humans, we don't want to admit that. So, Luke, if you're doing any trading and investing during the election, be prepared for volatility, but also protect what you have. Have your entry points, your targets in. I mean, this is not trading advice, but this is just in a suggestion. Protect what you have, because if you can't protect it, you can't grow it.
Well, I mean, for Luke and for everyone, what was the election a known event? Did we know that it was happening?
I haven't seen anything on the news. I'm not quite sure.
Did we know if it was happening? It's a known risk event. Trying not to get too political. I know my Twitter's on there. Those are my opinions. No one else's opinions. But we have a more volatile election, and I'm only 31. But this is pretty crazy what's going on right now. We don't know if there's going to be a peaceful transfer of power. There's so many things that have been building up over the last year, where this should have been marked on your calendar,
Mm-hmm.
right? You should have been hedging months and months and months ago. If you are in the buy and hold, you should have been hedging a long time ago for what's going on right now. And we're seeing it happen. We're seeing it happen in front of our eyes. We saw the VIX rising while the S&P and the NASDAQ were rising. We saw that right when Corona was happening. And now it's all coming to fruition, right? We have 10% down in the last 3 days.
Yeah.
It shouldn't have taken you by surprise.
Yep.
And that's part of your trading plan as well. Is if you're not looking at the news, you're just trading with a blindfold on.
Yep.
And you have no one to blame but yourself. But I mean, I'll talk personally. A lot of my bullish positions stopped out. Right?
Mm-hmm.
Did I lose 10%?
Probably not. You probably had you had that all set before you even placed the trade.
I was bullish on some stocks. I was playing some bullish options trades, and they stopped out. So what?
Mm-hmm.
You're going to be wrong if you're doing this auto-regressive type style of trading. You're going to be wrong way more than you're right. And if you were to bag hold, then your account's getting completely annihilated, and you got to hope that the market comes back when you need that money.
That's that strategy.
Yep. I mean, the buy and hold strategy, if you put a 100-year chart of the S&P 500, or if you put a 100-year chart of the Dow Jones Industrial, it looks like a straight line going up, right? So does buy and hold work? I guess, but
You can't get time though.
you can't get you can't get time. If 2008 happened, or if you were looking to retire, this year, and you saw 30% of your retirement account go away because you were too aggressive, um, will the market go back up? Maybe, probably. I think that everything is designed in the United States for equities to go up. But will it go up in time for you to be able to, utilize that gain,
Mhm.
or will it be too late?
Well, that's key, and that's why you have to have that investment plan for whether it's a short-term trading investing plan or a long-term trading investing plan. You brought up an interesting topic too. You said this election, this is a known event. We knew this was happening. If you don't know the election was happening, that's another show as well. But
You're not trading.
you're
No.
talking about risk events. I mean, a lot of
Yeah.
people like to use the Forex Factory, and by no means am I getting paid by Forex Factory. This is just a free site I like to
Maybe you
go to.
should.
Yeah, maybe, yeah.
I don't know.
But you want to know in trading investing what's coming up. So, like for instance, today Canadian GDP. Yesterday was the United States GDP, right? There's a Fed announcement today. There was one at 10 o'clock this morning, right? So you want to know what's coming up. I mean, you could peek at next week's even and see what's happening next week. Obviously, we have the election on Tuesday. Tuesday, isn't it? There you go. Tuesday all day, presidential election.
Looks like it's red too.
And it looks like it's red. So these are
Yeah.
high volatile, high impact events that you want to be prepared for. But when you have a plan, you follow that plan. If you want to remove the risk, get out of the market, right? Not be in these high volatile markets. If you can't handle the emotion, which is fine, we have emotion as people, just get out of the market. And that's why it's so important to just understand that to make better decisions. So yeah, this, a lot of people like this Forex.com. No, Forex Factory for their, I guess, their news and different
Yeah,
things that are happening in the market.
you can get them in 1,000 different places.
Yep. So, um, anything else? Anything else in a trade plan you think is important to discuss? Rules within a trade plan, where to get in, where to get out.
Yeah, I mean that's a huge part of a trade plan. Where to get in, where to get out. You need to define that before,
Mhm,
and you could use 1,000 different strategies for
mhm,
that. But there needs to be a place where you're a willing buyer, and there needs to be a place where you're a willing seller, and then there needs to be a place where you kind of throw your hands up and you say that you're wrong. And
mhm,
it's going to feel probably bad because you're going to be wrong a lot. But the biggest thing, and I see this in a lot of people's trading, is they just don't hold on to their winners. That
mhm,
that's one of the biggest things, because you just get stopped out so much that once you get a winning trade, you feel just it goes back to prospect theory. So if you want to look up prospect theory, you're more than welcome to. It's just kind of how all of our brains are wired. But you lose, you lose, you lose, and once you get that first gain, you just want to take it off the table. Or a lot of people like to just move their stops up, right?
mhm,
And all you're doing is you're not allowing your edge, right? Whatever edge that you've created, you're not allowing that edge to be expressed,
mhm.
and that's just all it boils down to. So some of the best trading feels awful, right? Because you're losing so much. But at the end of the day, at the end of the week, if you're doing things correctly, you should be seeing positive results. And if you're not seeing positive results, you need to have that consistency of the trade plan to go back and look and say, hey, what could I be doing better?
Mhm.
Because it is gambling, right?
Yeah,
That's essentially what it is.
it's organized gambling.
You're gambling. It's professional gambling. There's professional gamblers, and that's really all we're trying to do in the markets. Um, once you get one big winner on the table, you'll see that effect to your equity curve. You'll
Mhm.
just see it, and until you actually feel that, then you just won't go anywhere.
Yep. Yeah. Another good question here came in from Wesley. Will you guys be trading during the election? During election night?
Absolutely
Heard
not.
heard stories of crazy volatility on November 3rd.
Yeah. Okay. Yep. Look back at charts of 2016. It was, it
Yeah.
was crazy. Look at the Dow futures. I
Yep.
think it dropped 1,000 points and then came back. It opened up right where it left off.
Mhm.
In the overnight session, it dropped 1,000 points and came right back. So,
Yeah,
you
and
know,
that's a market people never don't really know what that is. I mean, the futures market, that's actually open 24 hours a day.
yep.
The show is called Forex Daily Dimes. We talk a lot about the currencies. I mean, I'll definitely look at the positions I have on if I have any on that time. And so, am I close to my target? Am I close to my stop loss? Should I just get out and not have that worry?
Yeah, and
Right.
liquidity is going to be crazy low
Yep.
when you have these known events.
Yep.
You talk about slippage. I mean, you're going to get slipped to death if you're wrong.
Hmm.
So you got to be really careful.
Yeah. What are your thoughts on trailing stops?
Yeah, well, there's really two types of trailing stops. So there's trailing stops based off of percentage. So it could be based off a percentage of a stock. It could be based off of some percentage of ATR.
Hmm.
And then you have what a lot of people use as kind of a feel good, which is, I believe it's called a technical trailing stop.
Hmm.
So let's just talk Forex. A technical trailing stop would be if it goes up 10 pips, your stop moves up 10 pips. I don't personally subscribe to the technical trailing stops just because it's basically moving your stop in the direction of profitability for no real reason whatsoever, except for making you feel good,
Yeah.
which isn't the point of trading. The point of trading is making money. The way you feel about it doesn't matter,
Yep.
right?
Market doesn't care.
Market doesn't care. If you want to feel good and lose money, that's up to you. But one of the trailing stops that I do subscribe to is a volatility based trailing stop. So it expands and contracts based off of the volatility of the product you're trading. So that would be more of of an ATR type stop. Moving your stop up one daily ATR unit per day.
Hmm.
Those are a little bit better, but it's not gonna give you that instant gratification
Yeah.
of that technical trailing stop.
Yep. Got it. I appreciate your insight on the show here today.
No, no problem.
About trade plans and rules and just risk management strategies. But the key is, and I think a lot of our viewers, understanding that when you have a plan and rules within that, you can be more comfortable and confident and really take the emotions out of trading and investing. So I appreciate you coming on the show here today, and hopefully we'll get to do this again.
Yeah,
It
definitely.
was a good time. Thanks a
Yeah,
lot, Spencer.
yeah. Thanks, Josh.
There you have it, Spencer Lewis talking about trade plans. Make sure to subscribe to the show here. It's the Forex Daily Dimes. Give it a thumbs up if you like that. It helps the algos, it helps the show. And we'll be bringing some more guests on next week. Until next time, retire young.